Hello and good afternoon. My name is Matthew McCoro, and I'm excited to be here coming up to the end of 2022 for today's workshop, where I'll be sharing with you a strategy how to leverage stock and options into a profit-taking formula. Now, we're going to be using some various entry order types. So we'll be using strategies around how we actually set up our trade. I'll be sharing those with you so you can add different types of techniques to your tool belt of taking advantage of different breakouts, different types of trade setups that I'm going to walk you through today. For those that I've seen before and I've chatted with and worked with, I do appreciate you joining us. It's always a pleasure to have you. If I haven't had the opportunity to meet you yet, maybe this is your first time joining one of my presentations, one of my events here, then I'm going to fill you in a little bit more on my background in just a few minutes. But I'd love to spend the majority of our time together on the charts, doing chart work in a workshop format where everything's going to be fully transparent. It's going to be open, so you can ask questions, you can provide feedback. I don't leave anything hidden. There's nothing that I don't fully disclose to you today on how this strategy works, how the various strategies deployed, how they work, and what to look for. In fact, I'll share with you all a very specific checklist that will take you down from finding the stocks to trade. If you want to trade the option, I give you a checklist on how to find the best option that suits the stock pattern. You'll have how to set the entry up, how to set the profit targets up, how to set a stop loss up. I'll fully lay it out for you today, and that way we have a good base to work upon. So that way everything's right in front of us. But before I do that, I just want to make sure everyone has a good understanding of what to expect in the event, right? So I want to make sure that number one, everything's working properly. So we're going to do a simple audio video check at this point. You should be able to see a slide that says sound check. You should see the webcam. I'm here with you live. This is not pre-recorded. And the sound should be coming through. If that's the case, just send me a quick note in that question section. It is private. It is on purpose. Number one, and most importantly, is to protect your privacy. No one else can see your first name, your last name, your email address. If you need further help at the end of the presentation, people put phone numbers in. People get very specific on questions and about accounts or about certain situations that they found themselves in that they may not want publicly known. So out of the gate, it's just automatically locked. So no one else can see it. That's also a good benefit too if you're newer, maybe you're traditionally shy to ask questions because fear of people, jumping in on your question. Don't worry about that. I've got myself here that's moderating the question section. I also have two team members here that are also helping to facilitate today's event to make sure all questions will get answered. Okay, so that's our goal. That's our promise to you. So Holder, appreciate it. Thank you. Haniwa, appreciate it. Olivier, I love that spelling. Hope I pronounced that right. I haven't seen that spelling before. All right, so it looks like it's good to go. And for the rest of you all that are chatting, I won't stay too long on it answering everybody's responses, but looks like everything is good to go. So once again, please feel free to fire away any questions as they come up. Don't wait on me to ask you for questions, just type them in. At that point, that way you're not to worry about trying to remember the question while you're trying to actively learn something or review a certain strategy that I'm going to share with you. Okay, so just fire away. Don't wait on me, and I'll go back and I'll make sure I answer those questions. So with everything looking good, let's keep this train rolling. All right, perfect. Momentum, AKA volume. Especially here the last several days, we had a range of different economic events, releases, news announcements that has started to pop up here over the last several weeks. We also have a couple more major economic data releases, right? Mainly we had CPI, we had PPI, we have lots of data that's been shared. We also had the federal fund target rate increased 50 basis points. So we'll talk about how understanding these patterns, it's less more you and I trying to interpret major macroeconomic releases. If we focus on the pattern, what happens is most of the time those events, those catalysts actually fall right into the active pattern. So you're not stressing or anxious about certain moves that occur, you're already prepared and expecting what took place to actually happen. So I'm going to share that with you today, okay? But the combination here that we're really going to base all of the strategy around today is knowing what momentum is, how do you read momentum, how do you trade momentum, and at the same time using some straightforward, simple yet powerful ways to leverage trend pattern. So we're going to combine those together. Once we combine that together, we're then going to talk about how we actually manage the trade itself. Okay, so that's got to be the overall focus. First, we're going to start by breaking down the overarching strategy, what we see, how we use what we see, and then how we actually use it. Okay, so that's going to be the full workshop level experience today. All right, I'd like to go as deep as you all want based upon your questions and feedback. Now I'm going to show you just two simple recent examples of what type of strategy trading I'm going to share with you here on the live charts. So what we're going to be able to walk away with at the end of this event, about an hour from now, when I'm done walking you through the strategy, you're going to be able to identify why we bought a long call at this precise point where my cursor is on the chart. You're going to be able to know exactly why we set this profit target way up here. You're going to know exactly why we selected a specific option chain to trade. This is a trade in 30 days, made 120% profit on buying just a straightforward long call. But it also works in bearish markets or bearish trends. So this is gold, G-O-L-D, not the precious metal. This is a mining company. It runs very closely to gold. It's also a few months ago. I want to show you just what it looks like on both bullish and bearish moves. Same thing here. This moment in time triggered this opportunity for this chart gold to go down. So instead of shorting the stock, we bought a put, a long put. So in just 8 days, we made about 65% profit. Regardless of up green days, down red days, you're going to be able to identify vertically a precise moment of time that lends itself to large price movement, large price action. It's a combination, once again, that I'm going to share with you how to use momentum and trend patterns together to give you this type of breakout move. Okay, that's what we're going to work towards by the end of this event. I also want you to start thinking about, right now, thinking about what stocks you want me to pull up on the chart. I'm not going to use a list of mine. I want to use what is interested for you. Okay, so over the next few minutes, I'll ask you to give me some stock symbols. At that point, I want you to type them in. Just don't do it yet. I want to keep it organized. Just start thinking about it, because I want to build a custom list from you in the room, and then we'll go through that as I teach you this strategy. Now, results is something obviously that we're out for, right? We're always searching to get better. I think it's safe for me to assume that if you're in today's event, something about the event title, maybe it was about the description of the event, triggered some curiosity in you. And that's why you're here. You know, it's very rare if somebody spends time with me in an event and they're not looking to improve their skill. They're trying to make more money. Maybe you're frustrated, you just can't get consistent results. There's something that's drawing you here today, and it always comes down normally to results. So the strategy I'm sharing with you works in red markets, green markets. It's time tested. We got 400, 500 trades in this model in the last several years, and they're swing trades. Okay, these are not scalping the market where you're in there every 5 minutes hitting a buy button, hitting a sell button. These are also not long-term holds where we're buying something and holding it for quarters and years. Okay, these are swing trades. My definition of a swing trade is we're in a position for days and weeks. On average, this type of trading model I'm going to give to you all today, it has a hold time about 3 weeks on average. That means I get in, 3 weeks later, I either hit my profit or I'm stopped out. So very short window of hold times, but it's not scalping. Okay, it's not actively in the market every day hitting the keyboard and hitting buy, hitting sell. Okay, it is more of a passive aftermarket approach where we're going to set trades up in advance and we're going to be done. Okay, that's some of the automatic order types that we're going to use today. Okay, but I just want to walk you through what results look like. I'll break it down more clearly here as we get into the market. Now, whenever we talk about results, whenever I talk about the financial markets, it is my responsibility to ensure that you all know that trading in the financial markets carries risk. you could lose a trade, you can lose all of the money you have in your account. You could also win money, you can also make money in the market, but it's up to me. I have to disclose the fact that this market does have risk. Use risk capital. Risk capital is money that if you do lose, you can still keep food on the table and keep the roof over your head. Okay, and I believe that we're all smart, we're humans. I think we already know this, but I've got to disclose that. Okay, but you've seen this a million times if you've been to any type of online event. So 2 words you're going to hear me say a lot today: simple and repeatable. That's my goal, is to provide that to you all today. I love to teach. I love to be a part of your aha moment. And what I found throughout my years of experience is that you're going to have multiple aha moments, and the outcome is a consistent, confident, low anxiety level type of trading. That's what I'm going to be sharing with you today. So my goal is to show you a roadmap that alleviates a lot of that stress and anxiety. In my experience over the last 15 years, most of our anxiety and fear is based on what we do not know. When things happen that we're not prepared for, that's when fear steps in. That's when anxiety levels increase. So one of the most powerful transitions that my traders experience is a higher level ability to forecast, to know what's going to happen the next couple of days, what's going to happen the next couple of weeks. And so when red days appear, they're not caught off guard. They already go into that day anticipating a retracement, a pullback, a down move. That to me is a powerful mental shift that it's hard to describe, that type of aha moment at that degree, but that is literally many of you in this room today are going to have several aha moments. But I want you to just stay focused on, my goal is to help lower overall anxiety, because when you can do that, you can focus on more of the repeatable process, right? It's not a shock and awe type of trading environment. Of course, I've already shared a couple of results here recently. I'll show you a lot more if you want them, but these tools, this technique, these strategies can help you make money. Obviously, that's what we're here for. So for those that haven't met me, this is the last slide for the next hour. Okay, I do all my teaching on the charts themselves. But if you haven't met me before, I've been in this market teaching, coaching, mentoring, leading an organization in revenue. I was a chief revenue officer as an executive for many, many years. In that 15 years of experience, the benefit to you in that experience of mine is that I not only have been taught how to trade at a highly technical level, so a chartist, master chartist level, where I know virtually every indicator, how it's used. I can manually chart with the best, but I was paid to learn how to trade the market. It was part of my role when I started with this company. And throughout that experience, I moved my way up through the sales and marketing side to become the chief revenue officer. Well, part of my purview, part of my responsibility was not only just revenue and marketing, but it was also product creation, the product team side. So responsible for creating products, creating different systems, technology offerings, trading alert services, physical direct product, right? So with that, I also had the product support team. So I had an amazing opportunity to see not only what products, how the method of teaching works amongst thousands and thousands of traders, but also the common pitfalls that traders faced. So in 2018, I stepped away from that company. I had 2 small children. They're still small in my mind, but they were 3 and 4 years old. And I had the similar, a typical executive, work life. So I'm out on the road, commuting to work as my children are waking up. By the time I get home, it's basically bedtime. And so after several years of that, I decided, look, I don't want to miss out on the development of my children. I want to be an active, engaged father. So I stepped away from that role in 2018. And after about 6 months, I just had a yearning desire to teach and coach again in this industry. It's just a strong passion of mine. But I didn't want to do it the same way, where there was a constant drive and need to create new product, to come up with a new shiny gold coin every day. So I went out and reached out to a lot of associates that I've met, a lot of business individuals that I had a strong relationship with, and I said, look, I want to create a new company. I want to do things differently, and I want to focus on providing education at a fair, easily accessible price. Because ultimately, if we can do it a different way, really leverage different types of technology to teach and coach, we can lower the overall cost of the business. And so with a beautiful partnership, we've been able to provide and create these programs that is a combination of trading signals. So I send out my picks of the day, of the week. At the same time, I back end and support that in live trading sessions. So by combining an outreach program where I help traders follow along with the strategy, I also teach them the strategy. And so there's a full round circle type of environment where you get an ability to follow along with the strategy of trades that I pick and select. I deliver them out to my clients, and then I also teach them on a weekly basis in the live market, running analysis, and that way there's a full immersion into this really changing, like a life-changing focus of how to anticipate the market. So that's a little bit about me. I do believe in simple, I do believe in momentum and some of the basic foundations of the market. So at this point, I'm going to jump to the charts. Okay. I'm also going to turn off the camera just so we have more real estate and we can focus more on the chart work and less on watching me. All right. But I'll be back with the camera towards the end. But at this point, I'm going to now transition into the charts themselves, and I'll walk you through the chart I use, how I set it up, and all that good stuff. So while I'm doing that and transitioning, I want you all now to go into the question section and give me your list of stocks. Give me a list of stocks, and I'm going to create a custom watch list for us. And then we can work on that list, and I'm going to teach you the strategy. So go ahead now, everyone go to the question section. Give me one, give me two of your stock symbols of interest, and I'll build us a list, and we'll go through that together. And that will make it more individualized to you all, and it's not just something that I've already created and I already know like the back of my hand, right? So that's how this transformation is going to go today. You're going to be able to see different types of methods to open up the horizons for you. So, all right, the list is firing up. So let's get this going. Today is the 15th. All right, perfect. And I just renamed my main list. All right. It has been a volatile week of action, hasn't it? My type of my cup of tea. I like the volatility. Oh my gosh, there's a lot of this. All right, perfect. So I'm gonna go through this and I'll call them out as we go. So we got Devon, I like that symbol. DVN, we've got FCX, oops, FCX. Then we've got Sting. We have Apple, Marvell. We got the SPY. We got the NASDAQ. Suncor. What else? We have Tesla. We got Pump. Lots of energy today, huh? What, G? Let's see, MDGL. I couldn't find that. IIAG. What is this? Oh, pharmaceutical. I already have Tesla, right? I have Tesla. Do we have Square? No Square. Who else do we have? We've got BHC, Bosch Health Companies. I always find it interesting to see what you all are interested in. Suncor's up there, Apple's already. Tilray, ABBV. You're welcome, Robert. Robert says, let's see, UAL long put trade hit profit target today. Great call. Yeah, appreciate it, Robert. Catching the snap down. All right, a couple more coming in, and then we'll wrap this list up, and then I can always add more if we need it later. PANW, Palo Alto Networks. All right. Oh, we got a nice range of different stocks. So this software I'm using is TradingView. It's my preferred charting platform. I've been using it for years. I have a paid account. I have the pro version. There is a free version. The free version, you can run the entire strategy I'm going to share with you today. Now, part of my, I guess, transformational change on how I manage and fulfill products with Concordia Financial Exchange and services is delivering and providing to my traders a low-cost approach to trading in the markets. Now, that's not just talking about trading themselves. I'm talking about the overall business costs, right? Just like I look to this when I trade as a business, I have a business mindset when it comes to investing in the financial markets. There's costs associated in investing, right? There's a cost to trade. Each trade has a cost associated with it. If you're using software that costs money, then there's a cost associated to trading that you take on, right? That's overhead of the business. If you're using different types of screeners, different types of resources, education, right? There's an overhead to that. Well, for me, what I have found is that some of the most often used and simple indicators can beat out expensive software. That's my experience. If you want to pay for expensive software, then by all means do it. But for me, my goal is to provide not just tactical and strategic trading coaching and mentoring and training, it's also the other experiences around the industry. I also provide insights and behind the scenes access, such as technology. I am going to be using some of the most simple, most known indicators, but I'm going to use them in a different way in combination with momentum and volume. So on this screen in front of us now, I have Pfizer up, but let's start with one of your picks. So I'll just pick on the first one, which is Devon Energy Corporation. So on the chart now, I've got 4 indicators, and this is the main 4. There's a couple more I'll add on for teaching purposes, but these 4 core indicators is what I use on virtually every single trade, every single piece of analysis. So what we have are simple moving averages. I'm going to start there first, okay? And I'm going to actually start with 1, and then I'll reintroduce the other indicator sets. So one of my clients here is in the room. His name's Robert, and he made a comment about a trade on United Airlines that I sent out. And he said, hey, you hit the profit target, great call. How that's identified and found is by using search criteria based on a certain pattern that presents itself. When that pattern appears, I see the patterns. I don't have to find them. I have a list of stocks that appear that meet the pattern guidelines. Then I set up a trade accordingly. So nothing I'm going to share with you today requires a manual level of analysis where you're looking after dozens and dozens of charts and spending hours and hours and hours trying to research and find out what's happening. That's the output. The input is what I'm going to share with you now, how we get to that point to find the next trade. Because this list here on the right that we've created as a group, these trades and these symbols are at different points of time. They're at a different stage of a trend. Okay, but I'm going to use this list to teach through this process. So the first thing I'm going to do at this point, you only see one trend line. It's a moving average indicator. Now the combination of the time frames or the lengths of each one of these moving averages are specific and are used in a mathematical formula, okay? But what I have here is I have the largest indicator time frame wise, which is a 50-day moving average. This is our long-term trend line. 50 days comes out to about 2.5 months, right? Because on average, there's about 20 trading days in a month. So 50 days, 2.5 months. That's our longer term trend line. It's very commonly used. This is a classic indicator setting of 50. Okay, so the reason that's important is because when you have alignment, where a lot of people look at the same data across the market, I'm not talking about retail traders only, I'm talking about big money institutional hedge fund trading, they use this similar indicator time. So that's why you'll see a lot of reaction around these trend lines because they're commonly used. Money is traded using them, okay? So what this 50-day is doing is giving us a rolling active trend line. If you don't know how a moving average works, what it does is it takes the close price. So today, for example, Devon Energy closed at $61.58. Okay, that's where it closed. End of the day, bell rang, that's where the price was. So what we do is we look to where is that price in relation to the 50-day moving average. So being that Devon closed at $61.58, look above, and this is where the 50-day average price has been. The last 50-day average price has been $69.59. You can see the relationship vertically because here's the price, here's the candle, here's the trend line. Okay, so we're below it. You can also see the data in the top left. And as I scroll back in time, you can see how the average changes, right? So every day that closes, it now is recalculating what that trend is. Now it's the longer term trend. So when I scroll out and put more bars on the chart, more data, you can see how it becomes our trend line. And so when we're above the trend line, right, that is our signal of an uptrend. When we go below, that becomes a downtrend. Uptrend, downtrend, uptrend, downtrend. Okay, this is the same equivalency if I'm drawing a long-term trend line and I'm using sound technical analysis and I have all my trend lines drawn, okay, connecting my dots, connecting my lows. I have to constantly adjust based on trend, okay? That manual process is the same math, but this is mathematically generated, okay? I don't have to sit here and draw my charts all day long, okay? The other benefit of using an indicator is that I can then search based on this data. I can search using different types of filters to go search the market for me. Certain types of stocks at a particular point in time that I want to trade. So the first simplistic approach is, number one, identifying trend direction. No matter what anyone says out in the space, you know, some of the my experience of marketing in this industry, I'll tell you, if I have a strategy that requires manual analysis, if I'm marketing my strategy, I'm going to tell you that indicators are lagging. That's a sales tool to try to present my ability or my tool or my technique in a better light. Well, I'm here to tell you that any piece of analysis, any piece of research done, because we don't know the future, right? Every piece of research, every piece of analysis is done in arrears, meaning we're looking at some previous data point. Simple examples, think about earnings. Okay, so you know, when you look to earnings releases, right? Earnings announcements is of when? The previous quarter, right? All research done on a chart about investing is always using previous data. And that's in essence what makes it lagging. Okay. But to me, the beauty of having a mathematical objective approach to trend analysis is that it's the same formula. It doesn't change. It doesn't matter what side of the bed I woke up on. Math is math. An average is an average, right? It's a mathematical equation. So the speed in which we're able to identify uptrend, downtrends becomes powerful. So Devon, downtrend. FXC wasn't the choice, it's FCX. So FCX, uptrend. There's the candle, there's our trend, we're trending up. We're making higher highs, higher lows. That's the definition of an uptrend. Simply put, we're trending above the 50-day. Coming to Sting, that's an uptrend. Sting's looking good. This is an active trading signal here. This is a signal I actually sent out, a buy on Sting back here on the 21st of November. Okay, almost a profit target. I'll explain what that is, but that's your choice. You pulled it up and we're already in that trade. Here's Apple. Yeah, oil tankers. That's right. Here's Apple, downtrend. Okay. Marvell, downtrend, just flipped down below. Okay. Here's the S&P 500, uptrend. I know the red days hurt, especially not being aware of the down move. That may shock you. It wasn't shocking to us. We knew this was coming already. NASDAQ, downtrend, just crossed down below the 50. Okay. So now the speed on which a long-term trend perspective is easily identified. Suncor, downtrend. Tesla, downtrend. Pump, downtrend. MDGL, pharmaceutical company, downtrend. Okay. So now in a systematic, objective approach, we can flip through charts and know what's happening. Okay. ABBV, uptrend. Okay. Key West Microsystems, interesting stock, going down. Okay. Palo Alto Networks. Now I'm going to go back to the top. Understanding trend direction is one of the biggest obstacles that retail traders face. In my experience as the chief revenue officer, managing and running the customer service side of the business, that is probably the number one support issue was our clients getting in on the wrong side of the trade. How do you know that happens? Well, when you buy something and it goes against you immediately, meaning it goes down, right? I buy something because I want it to go up. When I buy it, it goes down. That is a symptom of being on the wrong side of the trade. To solve that, we need to get you in the right frame of trend direction. Number one, out of the gate, that's got to be addressed, and you need to have a process to identify that. Now, when I come back to Devin here on the chart, knowing where we're at in the trend is important so we know are we buying or selling. Do we need to wait? Is it not an ideal time? Is it more sideways than up or down? Okay, I'm going to show you how that incorporates. But what I want to highlight to you is that on this chart, as I get more data here in front of us, I want to talk through now about where is the best place to maximize profit. If I'm going to look to this chart, in fact, you're going to be able to look at any chart and pull up these indicators, and it will be so much more clear to you by the end of this presentation on where the best place is to be getting into a trade. So when we look to the best place to be in a trade, it's going to be where you have the biggest move, right? The biggest move in the market is typically found at trend line breaks. Another way to think about it is trend reversals. So I'm just going to come back here with Devin. We're going to go through a couple more of yours, and we're going to find them. So the reversal point comes when we are in a downtrend. So here's a recent move. We're in a downtrend, and then we flip from going below the 50 to above the 50. That is a reversal point. Yeah, I like it. We got a trader comment. He goes, rumor some entities are buying lots of huge max tankers to store excess oil for future time when crude oil prices go up again. Yeah. See, what you're going to find, that seems very, interesting to hear that. But to me, that is a subjective approach, right? I think that's cool data. It's a cool piece of information. But what you're going to learn here is that a lot of what we make decisions on is based upon subjectivity. So it's watching a financial network. Maybe it's Fox Business. Maybe it's Bloomberg. Maybe it's CNBC on the financial side business. Maybe it's somebody you like to follow on YouTube. Most of the time, those are commentary that is opinion based, which is fine. It's entertaining to a degree, but it's hard to really systematically trade that data. So for me, I prefer to let the data do the talking. In fact, I could unplug myself from any news out there and still be able to take advantage of breakouts without even knowing anything about rumors or news about a particular company. Because what happens is the money, the transactions themselves, buying and selling, moves the market. If there's no buyers and sellers, then price goes flat. What happens on Saturday? Price doesn't move because the market's closed. Come Monday at 9:30, when the bell rings, price moves. Why? Because transactions are happening. Okay. I'm going to talk more about transactions in a second. Let's first start just seeing where the best opportunity is on a chart. So when I see a reversal point where a trend is going down and then it goes up, that transition, that reversal point, is where you will traditionally see the largest price move, is that initial reversal point. So that is where we reverse from down to up. It also works the other way. We go down to up. Okay, we go up to down. So this is that point of reversal where we are trending up, and then we broke the trend line break, and we had a surge in the opposite direction. It constantly ebbs and flows. So when I look to a trend, where I want to be on buying is at the place with the largest percentage move about to happen. And then when I think about that, I want to think about the absolute reversal point. Well, as I scroll out, you can see how many times you get a reversal and then you get another extension, right? You see all these waves that are extending up, coming down, extending up, coming down, okay? To me, it's always best to be at that point of initial reversal. Well, if I look at Devon, and this has been extremely volatile because of energy, that's why I know this stock could be traded a lot, because it's energy related and it's been bullish and it's been volume based. So it shows up a lot on our lists that we trade. As I go through the next several, and you can see the same reaction. Look how fast this moves on the break. You see this uptrend, see this reversal, break it, and then see how the floor falls out. The bottom falls off, right? Same thing on these up moves. See the reversal point, then you see that strong surge that follows it. And for a strong trending stock symbol, you only get so many of those reversals in a given year per individual symbol. So when we look to Sting, I'm going to go back here. This is one of your picks. I'm going to now incorporate some of these additional indicators to walk you through how this is put together. Okay. So initially at this stage, I want you to understand how the 50-day moving average works. Okay. So I'm going to go back to this initial trade entry, which was based on this bar. So with Trading View, I can go back in time. Okay. So I'm going to go back in time to this point. This is what triggered the signal that I sent out to the traders. Okay. Now I'll show you what the signal was, but let me just walk you through this first. If you can know one thing about extensions retracements, I just want to clarify what how I use that term, extension and then retracement. So the market does not go in a straight line. The market will create a high, it will then pull back and create a low, and then it's going to create either a higher high, which will extend that trend, or it's going to reverse and take it out and go the other way. Okay. So when I think to finding opportunities, I want to have as many of the odds on my side as possible. So right now we have one data point, a long-term trend line. Well, as I introduce these other two, okay, I've got a 10-day moving average now, which is blue, and I have a yellow trend line, which is a 20-day. It is a mathematical correlation between why I have a 10 and 20 and why I have a 50 here. Now, there's lots of combinations people use. Once again, this combination of time frame is focused on the length of trade. I'm looking for a pattern that will give me a swing trade. So a trade that can last a few days, that trade could last a few weeks. This setup is not for buying something and holding for weeks and months in advance. Okay, that's not this. I have a different setup for that. This is a swing trader. Now, when I introduce these other two trend lines here, trend lines are vertical and horizontal based support and resistance. They're angled support and resistance. So most people are familiar with horizontal left to right support and resistance. You'll find a high and you will identify that as a point of resistance. Okay, so if we're below the market, that's resistance. It's resisting price. Okay, If it's underneath us, it's support, it's holding up price, and they constantly shift. So that's the same explanation of the 50-day moving average. Okay, when we're above the 50-day moving average, we have support underneath us. Okay, so when we look to this pattern, this is on the beginning of November, okay, November 1st. Where are my trend lines? They're underneath us. There's the 10-day, that's support. 20 support, 50-day support. That's 1, 2, 3 trend lines underneath us. That's 3 data points underneath us that are giving us support to keep price higher. That's 3 confirmations. Now, the place where this happened in the trend, okay? So the initial reversal happened way back here. The first time we were trending down, we crossed over, we came back down to it here. So see how the 10 came down and we came back above. This became a secondary reversal point. You see the 10-day just came back below and then came back above, really tight here, okay? That reset this clock, okay? That's advanced, I teach that in class, but that's a reset of trend. Now, the reason that this showed up on the list is not just because of the trend. I'm gonna introduce the 4th indicator. The 4th indicator that is always shown on every single chart that I run, every piece of analysis, is volume. That's what the VOL represents. It is a volume indicator. There's nothing fancy about it. What this volume is the number of shares traded. It's not dollars and cents, it's the number of shares. Now, without my trend line on volume, I have this set to columns. All this is a graphical representation of how many shares traded. So on November 1st, if you look to the top left corner, you'll see under the moving averages, you'll see the volume, VOL, and it says next to it 1.886 million. That's the number of shares traded. Now, it's irrelevant to me if it's green or red down here. This is not a trend indicator below. It's just simply green because the day was green. It was a bullish day, so then this column's green. It's nothing to do with trend for me. Now, the day before, there was 1.28 million. Okay, the day before was 936,000 shares. It's irrelevant data unless we have something to compare it to. So just like I have on the top, I've got moving averages to give me a trend perspective. I'm going to turn back on the moving average of volume. So same formula, but instead of the 50-day close price or the 20-day close price average, this is the average of the daily number of shares traded. So when I turn that on, now I have an ability to compare the activity because I'm trying to find momentum. What momentum to me gives us is a simple way to identify where a surge of trading activity exists, when and where it exists. To understand momentum and volume, we just have to think about how the financial markets work. When there's more buyers than sellers, price goes up. More sellers than buyers, price goes down. When there's no or low trading activity, price goes to the right, okay? I've yet to come across any example of any stock that when you find the average number of shares traded and you compare that against the low volume days for a stock, that you do not see a significant difference of the average price move. So what that means is that if we take Sting, which is Scorpio Tankers, if we take this company, take this stock data, and we go back 12 months or more, it could be a month or more, it doesn't matter. Take a set of data, take all of the individual days trading activity, take all of the price action in the day, open, high, low, and close prices, get the average of the daily volume, and then identify the days that were over average, you will see a higher price move. You'll see higher spreads between highs and lows on high volume days. I've yet to see contrary data to that because that's how the market works. The value of high volume, what does that mean? When there's a lot of activity, and let's use this example, when we have a surge of trading activity, right? 1.8 million over 1.3, right? That's another 500,000 shares traded. That's almost 50% more. When I look up to the chart and I see a big bullish day as exists right here, that to me is the ultimate conviction. That is walking the talk. This is no longer subjective. It's objective because the data is showing that there's a large amount of trading activity above the norm. Where is that happening on the chart? It is at a new high. Okay. That is significant. That to me is more significant than any commentary, any analysis opinion, because this is actually what happened. It's a transaction. It's the receipt of activity. There's no better conviction than that, right? If you're not optimistic, if you're not bullish on Sting, why would you buy it? You wouldn't buy it. If you are negative, if you were pessimistic, if you thought the outlook was bleak, then you would be more apt to sell it than you would be to buy it, right? That's the same that goes for you and I, the retail trader. That's the same conversation that Warren Buffett and his team have, right? They're only going to buy it if they believe it's going to go up, right? They sell when they think it's going to go down. So if we have an ability to find the moment when there's a strong conviction at a particular point on a pattern that is setting up for a move, I want to be a buyer there, right? That is the vertical look of combining trend pattern and combining momentum or volume. So got a comment. What about on July 6th? I don't know. What did you say? July 6th back here when volume goes down. This volume play, okay, big volume bar reversal. What this strategy gives us is built-in entry confirmations, okay? When I have this up on the chart here on the right, this is the what we're going to trade. So think about your trading in 3 questions. What, when, how? What am I going to trade? When do I trade it? How do I manage my trade? So what I'm walking through now is identifying what to trade. Well, what I want to trade is I want to trade stocks that are set to break out. That's the what. When do we trade it? When do we buy? When do we sell it? Okay. So I'm going to explain. I'm going to go back here in a moment, but let me talk to this right here on the front end, because most people are familiar with buying. You understand buying easier, uptrends are easier to teach to. Then I'll go back and show you that down move. So when we identify what to trade, okay, let's now talk about when do we trade it. With this strategy I'm giving you all today, I'm walking you through, I don't chase anything. So when I think about buying something or trading something, I think in the mindset of I want to catch a breakout. I don't want to chase a breakout. So catch and chase. I want to be on the catch side. I want the market to come to me. I don't want to sit here and rush in and try to run down a moving car. Okay. If I've got Tesla and it's about to race and go, 0 to 60 in 1.8 seconds, whatever the fastest Tesla is, right? I don't want to catch it then. What I want to do, I want to jump into the seat when? Before the car takes off, right? If you're running to a flight, right? We got the holidays, right? If you're traveling for the holidays, do you want to chase the plane before it takes off? It's not a pleasant place to be, right? When you're running late, you're running through the airport, they're about to close the doors and you're running to the plane. That's chasing. What I prefer to do is get there a little early, right? Go to the lounge, have a few drinks, have some food, and then when they call first class, I get to go sit there until I can get my free cocktail and start my trip, right? That's catching, right? I'm going to catch that plane. I don't want to chase it down. Same thing on trading here. So I identify a potential move because right now this is a potential breakout. I'm not finding this until I have an opportunity to identify a potential move. So once that happens, now I go, okay, when do I trade it? Well, if this is the bar that triggered and showed up for me, well, now I simply set my entry up. Well, how we use entries is by using our broker account in a different way. So what we do is we use a pending entry style. okay? So we take the high of the bar. This is the bar height. So imagine it is 450. You don't have to imagine hard because it is. I'm in Florida, okay? 450. This is when I trade. This is the time I trade. I trade after the market closes. The beauty of this is that if you can have 15 minutes between 4 o'clock and 9:30 the next morning, then you can run the strategy because we're setting up in advance of the next day. You don't have to sit here and be in front of the computer all day. You don't miss trades because you can't hit the go button. We're setting this up in advance. This becomes the last confirmation. Do we catch $52.15? You see, the high was 52.14. So I then set a pending entry up. I set a pending buy order. I tell my broker I'm going to buy Sting only if it marks at 52.15 or higher. Because for this to be a breakout, this has to hit this price and go up, right? I mean, a breakout, a bullish breakout means price goes up. So I only want to buy it if it fulfills the pattern. If it comes down the next day and does not hit the entry, then I don't want to be in it, right? I'm looking for a bullish breakout. That's what I looked for to find this trade. So the final confirmation is it goes up, right? So by sitting there waiting, I don't have to sit here and guess. I don't have to hope, I don't have to wish, I don't have to dream. I have it set up in my account and it's literally waiting there. It's working. Market opens the next day. If it hits my entry between 9:30 and 4 o'clock the following day, I'm in the trade. If it doesn't hit it, it cancels it. Okay, I'll show you what it looks like, but that's the method. I'm using a pending order for the following day. So with that, the next day, you see the wick, it triggered the trade. I don't care about the red day. I care about, did I hit it? I hit it. So at this point on the 2nd November, we are now in the trade. Trade is live. Trade automatically executed. So to go back and answer your other question about this move, right? Same setup, but inverted. So we have a big red volume sell day, right? See that huge spike of volume. Look up, huge red bar. Where this would be a setup to catch a bearish breakout. So where do you think we sit? One tick below the low. Because if this goes, it can go like a rocket ship, okay? So we now have a pending entry order, one tick below. So great example of the market not breaking out and not triggering the trade. Next day, it goes back up into the buy zone. Okay, this trade then canceled automatically. We would not be in that trade because it did not continue to break out bearish. This is the benefit of not chasing. You see, if you chase this and just traded the break as soon as it broke, you'd be in trouble because this stock went way back up into the zone. So the method of the entry is a built-in mechanism with patience, letting the market come to us. So this is the level of detail that all of my traders receive in these programs, okay? This is the same way you'll trade, okay? So I've got my traders, they follow my signals, I send them to them. But then they fully incorporate, they fully immerse themselves in the strategy across all of their trading. Because I send out like one, I'll send out two, right? A day, sometimes it's 3 or 4, maybe 5 or 6 a week, right? It just depends on what sets up. But there's many more trading opportunities that exist beyond 1 or 2, right? So by fully immersing themselves into the method, they then fully trade this independently, okay? But this is the details that all of my traders get to at their point of trading. This is one that I sent out. So you can see the detail here on the screen. I'll zoom in so you can see it. So this was sent out on November 1st, okay? This is the trade. The entry was good till the next day, 11/2, right? Here's the symbol. The strategy is we're going to buy the long call. Here's the expiration month to select. Here's the strike price to select. If you want to use a premium limit, there's a premium, okay? That's the limit. The stock trigger, 52.15, okay? That means you set the trade up and you're gonna set your trade to buy this option. So we're building contingent orders. We're gonna buy the option only if the underlying stock hits 52.15 the next day. So we base all of our options trading around the underlying stock. Now, why may you say, is that the case? Well, let's go back to the basic essence of what an option is. Options are a derivative of the underlying stock. As the stock price moves up or down, the premiums move up and down. The derivative means they are tied to. It's a directive of. They're attached. Okay. Now, yes, there are variables and options that impact the premium price, but nothing more weight is given to than the underlying stock price. Okay. So the search ability to find the breakout stock gives us flexibility. If we want to trade the option, then we can trade the option. But everything is based on the stock. We're just now leveraging an option play to take advantage of leverage. We're not searching at options and working our way from the bottom up. We're working from the top down. So every trade is set up, no matter if it's an independent trade, if you're trading stocks only, if you're trading options, every trade that I teach to in the method of the checklist and strategies always incorporate a level of catching a breakout. So we're setting up an advance of the market being at a particular price. We want to catch it. And then they're always leveraged with stop losses and profit targets. On stock trades, I use multiple profit targets. Option trades, one target. But this is all done up front. Okay, that's the beauty of this, is that it's done at one time up front. That means you don't have to go back and adjust your P&L, adjust any stop losses. Everything is done up front. Full transparency. I mean, once I sent this out, I can't go back on this. I can't adjust this. I sent it out to the universe, to the world, to the hundreds and hundreds of traders that follow me. It's already out. They're already setting up in their trades. I have it in my trades, right? Everything is set up. Everything's protected. How many of you know how to set this up now? Type in a yes if you know how to set this trade up exactly as I set it up here. I'm just curious to know the experience. Type in a yes if you had this specific detail. Could you translate that into your account? I'm always just curious to know. Okay, some people yes. Yeah, so questions coming in. Do you pay the $6.97 if the ask is lower? So a limit, the premium limit there of $6.97 is the highest price you'll pay. That's the ceiling. Think of that as the most you'll pay. The definition of a limit to a broker is at or better. So it's at $6.97 or better. Better is lower. Okay, that's what a limit definition is. At or lower. Now, for that specific trade itself, we actually triggered at $6.83. The actual trigger price. The limit just sets the ceiling. So here's the actual, it's still live. It's an open trade. So here's Sting. There's the trade. You can see the date, see 11/2. That's the date it triggered. So the trigger date, see the 683? We had a limit of 697. Okay, so it came in lower. So it looks like we got definitely before you sell or close the options. Let's see, I'm not sure. Yeah, no worries. Catching the breakout is the key. Okay, that's the mental shift. Not chasing, catching. Now, for me, there's other reasons why I do an aftermarket setup. My personality is extremely optimistic. You can probably get a sense of that. So for me, what I found throughout my career is that the more I have an arm's length away from the emotional decision making, the better I am at following a system and not falling prey to emotional decision making. So as I showed you, this already went live, okay? At this point, we're over here, okay? So this is where the current price is. But this has been set up, it's sitting there, everything's there, okay? To exit automatically. Inside of every platform is different. I use Thinkorswim. This is Thinkorswim through TD Ameritrade. I have clients all over the world with all various different brokers accounts. 90% of the brokers out there that I've seen, you can do the setups as I'm teaching you here, okay? They're just gonna look different. But if I scroll down here, you're gonna start to see, all of these are, you can see it waiting conditionally. These are all working, these are open orders. They're all red because they are selling orders, okay? The waiting conditionally is the stop loss and profit targets. So I'm gonna find Sting. It's down here. Here's Sting, okay? See the date 11/1. That's when the ticket was set up. It says waiting conditionally. So when I open up this ticket, this is what it is, okay? This is gonna sell the option contracts that we bought on November 2nd. This is a sell order. It's only gonna sell it though if Sting marks greater or equal to, so above or equal to $59.17. That is the profit target, 59.17. 59.17. Okay, see, so I take all of this is delivered up front and set up front. So everything's protected. It's an OCO order. One cancels the other. It's a bracket. So no matter what happens, I've got protection. I know what my risk is. I know what my profit target is. I said it once. I don't have to mess with it ever again. It's done once. The only time we mess with it is if we run up against expiration. Okay, then I send out instructions on how to manage the trade. I don't leave you high and dry. I'm going to give you specific instructions on how to manage the trade as we get to expiration. I also will send out updates and move stop losses around to make sure we don't give away profit. Okay, those are things that I do actively every single day to help support this. The beauty of this, once again, is that everything is traded in advance of the market being there. We're already prepared. We're already waiting. Now, I'm going to keep going through this because I want you to start to understand the picking process. So how did I know to buy Sting at this point? I didn't just randomly have Sting up on a chart and I said, okay, I'm going to buy it here. Okay, it's not random. What I'm going to do is I'm going to pull up several data points here, several checklists, and I would just want you to visually see the checklist, and I want you to take a screenshot if you want. It's on me, okay? This is one of the 4 main checklists and strategies that we deploy. So I'm going to pull this up. You're going to see it on the screen, and I'm going to walk you through it briefly, because to find a trade, we need to have certain patterns, certain activity aligned, okay? It needs to be lined up. That's what I want to find, okay? So to do that, we've got to use some other resources like a filtering screener process to always have a list of stocks, okay? So this is the conservative bullish checklist. This is one of 4 that I run, okay? I use this to find trades that I send out. I also teach to this, so all of my traders have this access to these checklists. Here in the middle, it says trading view filter settings, okay? This is the precise settings that we use to find these breakout opportunities. I'm going to show you what it looks like in real time, but these are the settings. So if you want the settings that I'm going to show you, then take a screenshot. To take a screenshot of GoToWebinar, get out of full screen mode, so hit escape. That'll get you out of the full screen. And then in the top of the viewing window, you'll see a camera button. Click the camera, it'll take a screenshot of whatever I am sharing. It'll save it wherever you want it, but it'll save a picture of this on the screen. So feel free to do that. I'll leave this up a moment. Now, when you see these filters, okay, we're leveraging data in a specific way to find stocks at an opportune time. So that way I am no longer going one by one. I'm having a list of stocks basically delivered to me. Then I have a short list. And then I look at the short list and I decide which one I'm going to trade. So to look at this in actionable terms, or in an actionable way, I'm going to walk you through here what each one of these accomplishes for us. Okay. So the first thing I'm going to do is I'm going to walk you through, let's go to the actual charts. Okay. So I'm going to keep this handy. I'll pull it up in a second. So when I come down to my screener, I'm going to pull up the bullish breakout. Okay. Now here on this list, this is exactly what I look for in a particular trade. Now, market cap, I have 200 million or higher. 200 million is a small cap. Okay, so that's the lower end of what is typically classified as a small cap stock, small capitalization, right? So 200 million is the low end of the small cap scale. Well, to the right of that, it says over 2 trillion. Okay, so it's 200 million or more. So we're not trading micro cap stocks. We're not trading low volume stocks. We're trading stocks at a minimum that have 200 million as a market cap. So that gives us liquidity. Volume is the number of shares traded. So I have 1 million or more in the volume column. That is the most recent data. The most recent day needs to have a minimum of 1 million shares. That's also liquidity. The other volume filter setting I have is average volume. It's one thing to have a volume spike over 1 million. It's more liquid if a stock averages over 1 million shares. So this provides another dimension of liquid stocks to trade. I'm not trading these peripheral stocks, right? These stocks that trade 100,000 shares. Insider CEO buys 50,000 shares, stock price jumps 50%. Okay, that's not what I trade. I'm not looking for those trades. This setup here eliminates those from our purview. We're not looking at them. So I've got 3 liquidity filters. The next thing I have is relative volume. So just as I have on the charts, I have a moving average trend line, right? To allow me to find a surge above, below. Now I will say there's 2 spectrums of volume. There's high volume, there's low volume. Low volume tells a story just as much as high volume does. But that I cannot address today. I won't have time. So I'm focused on the high volume spectrum. So relative volume is a formula. What this is doing is I'm telling TradingView to only give me stocks that traded above their average trading day. That's what this means. Above 1, this is a factor, not a percentage. Meaning if a stock averages 2 million shares a day and today they traded at 2 million, that's 1 times, right? That's a level 1 factor. That's a 1 factor. It's also 100%, right? They hit their average 100%. That's 1. If it was double, let's say it averages 2, but they hit 4 million on the day. Well, that's 2, okay? So this is going to help us only find stocks that traded above their average trading activity. This is momentum. So now I have a search criteria to find momentum. Now, the bottom 3 here are patterns. So remember I started the presentation, trend pattern and momentum. I probably said momentum and trend pattern. That's momentum. Here's my trend pattern. Price crossing up on the 10-day, 10-day above the 20, 20 above the 50. Okay, those are patterns. So just with these filters, I've addressed liquidity, momentum, pattern. At that point, when I find stocks in the list, now today, it's not a shock, there's no matches. This is a conservative bullish breakout. What this is looking for are 3 trend lines underneath the price with volume. What do you think the directional move today is going to be? Probably bearish, right? So let's take a look at another bullish one. Maybe we can get a couple in the bullish. Okay, this is aggressive bullish. Okay, so it's a little different than conservative. You see, now my main 4 criteria that I look for is a conservative bullish, aggressive bullish, conservative bearish, aggressive bearish. The difference between aggressive and conservative is the number of confirmations of trend. That's the difference between both these conservative and aggressive filter sets. The aggressive is trying to get there at the first moment possible of a reversal. The conservative is waiting for more data to align. That's the difference between the two. You will typically always have more stocks that show up in the aggressive than conservative because you need more criteria to make it conservative. Okay, it's just a rule of thumb. So this aggressive format, the difference is what we look for. Now there's 5 here. Okay, so if you want to be a buyer today, there's 5 stocks that set up for a bullish breakout. 5. How many stocks is this looking at? On a common stock number over 7,200. So of the 7,200 stocks, there's 5 that fit this aggressive checklist criteria, just 5. So when you pull up the chart, this is what it looks like. You see the reversal break above the 50. That's Align Technology. Let's go to Allstate. See the break back above that 50-day. That's what we asked for. We had volume today. Look at the volume. Here's Cytokinetics. See the cross of the 50? Look down below. Volume was above the average. Verizon. We're cross up above that 50-day. Sally Beauty. See that reversal point with volume. We're literally asking for a pattern. There's the pattern. Now I've got a short list. So rather than me being sucked in and just focus on just a handful of stocks to trade throughout my year, I'm literally focused mainly on liquid stocks at the opportune time with volume, and then from there I'm able to find what to trade. Now, if I go to the opposite side, and let's say we want to find some shorts, maybe want to buy some puts, I'll start reversing looking at the bearish side, okay? So now I'm able to shift and go to conservative bearish breakout. Okay, well, there's 32 now. What do you think these are going to look like on the chart? They're going to be downtrends. See, we're below the trend. We're below the 10, below the 20, right? See, the direction's different. We're asking for it. Now, this has 32. How many did we have conservative bullish? We had 0. So just through basic deduction, we can see what side is giving the more opportunity. Well, it's the bearish side. You have more numbers of stocks that show up here. So if you don't like to short or you don't like to buy puts, then you just not trade today. You'd wait for a buyer's environment. But the beauty of this is I don't have to sit here and randomly come across these stocks. I'm asking for very precise, specific pattern, and then I have a list of them. And I literally use the same list. Oh, that looks like a beautiful short to find trades with. So now, once you can understand how the trend lines interact, okay, we're looking at volume. Now from here, it's when do we trade it? Okay, now I'm going to set up a trade so you can see exactly how it looks. The setup, the order process. Because ultimately, once you can wrap your head around the flow of identifying what is opportunistic to be trading. Now, if you're not familiar with buying puts or what this bearish type of move we're trying to take advantage of in placing a trade, I don't short stocks outright. I've never been a high trader on short selling a stock. I'd rather buy puts. Okay, just to me, it's more risk controlled and leverage oriented. Okay, so that's just my preference. But if you want to short a stock, you can short a stock. It's up to you. You're adults. You guys can trade the method and how you want to trade. So I'd rather just buy the put. So what we look for now is I simply follow. I'm going to pull up the checklist and I run through it. So I found it already. Now I go to the trade setup. Set pending entry 1 tick below the bar low. Okay. I'm going to set 2 profit targets using previous lows. I'll show you what it looks like. I'm going to set a stop loss 1 tick above the previous high. Okay. So this is the initial setup. Once I have that on my chart, once I have that on my plan, I'm going to look for an option that fits this criteria. as you can see, it is 4 steps to check for the checklist. 4 steps on the option. That's it, 4. Now, I know a lot of you who trade power user options, you're gonna, say, well, that's not enough. What about the delta, gamma, vega, theta? What about implied volatility? What about all the other good stuff around options? I mean, there's like so much around options that, in my experience, a wise man once told me that the less you know about options, the more you know. So I use them in the most straightforward, simplistic way. And 9 out of 10 times I'm buying options versus selling them. I have nothing wrong against selling options. I just think there's a precise pattern and sequence of when that is best over buying on the buy side. But that's, once again, that's my preference. So I'm going to go through and mock this up, and then we'll go into how do we actually put it into an account. Okay. So here's the bar. Okay. I'm going to get and move my entry. I'm just going to label it. This is not my trading account. I'm just labeling it, and then I'll take it to my trading account. So the low of the day here is 25.88. Okay. I went 1 tick below that. I want to have enough of a breakout so I can catch a move, but I don't want to buy it. I'm not trying to buy it as soon as the market opens. I want to buy it if Uber, I have Uber on the screen, if Uber marks less than or equal to 25.87. Okay, so I'm going to set up a catch trade setup here. Now, to find my profit target, I'm going to go to previous lows and I'm going to identify them. Now, I teach an advanced way to do profit targets, but we'll use this simple way here today for the sake of time. There's one, actually, I'm going to use this lower low, okay? I'm going to go to the next low, that's fairly tight, but I've got 2. Now, the only reason I use 2 targets is if I'm buying or selling the stock, because I don't have to worry about time, right? There's no time decay on stock ownership, unless the company goes out of business, right? Then that's 0. But outside of that, there's no real time. There's no time factor working against me. There's no theta, right? So for the option, I'm going to trade to the first target and I'm going to get out 100%. I'm just going to exit at that point. Now for the stop loss, we're going to go to the previous high, which is right behind us, and I'm going to go 1 tick above it. So I'm going to have some wiggle room. Now, as the trade goes, we'll adjust the stop loss, but initially this is what the stop loss is, okay? So to set up the option, I have the work done here. Now it's a matter of just plugging in the trade. Once we set it up, this will be waiting for tomorrow. Just sitting there waiting. It's working, okay? So we're going to pull up the option. I'm going to have my little cheat sheet right here. Okay, here's the Uber, here's the option chains, and okay, what's our criteria? Okay, we're going to look for deltas between 65, 75. What that does is that puts us in the money. Okay, so we're going to be in the money on our strike price initially. I want to have open interest greater than 100. That's liquidity. So liquidity on options is not the volume, it is more so the open interest, how many open contracts exists. The higher the number of open interest, the more liquid, right? Now the buffer of time, we want to find expiration between 45 days and 90 days. Now, not every option has the same number of monthly options expirations. They don't have the same sequence. Some go month to month, some have week to week, some have, 1 month on, 2 month on, 2 month gap, right? Everything's different. So I'm less concerned about the months. If we're less than 30 days, I don't mess around with it, okay? But general thumb, we're looking 45 to 90. Now spreads, we want a tighter spread. We don't want a spread that's wider than 10%. This is the complete 4-step checklist. Now, as I work with you, I'll teach you different ways to look at implied volatility, different ways to time and find profit targets, when to go out of the money, in the money. But generally speaking, this is the formula that we use for 80% of our criteria, just these 4. So then as I come down to the option chain, now I'm on the put side, so we're on the right-hand side. As I said, one day is not enough. I'm not even gonna look at December. We have 36, 64, 92, 36, though it's not 45, like I said, as long as we're above 30 here, I would prefer to go to the closest month, as long as we have all the other criteria. So if we take a look here, this is puts, and I'm gonna go through the criteria. Okay, so number one, delta. Okay, so this is 65 delta. We want 65, 75, so 65, we've got it here. Now the reason for this, if you don't know options, see the strike price is $28. So when I'm buying a put, I'm buying the right to sell this at a later date, okay, or to buy this at a later date, okay. So if I'm going to buy a put and it's above my price, see 26.24, right? Then I'm going to make the difference of the profit. That's in the money, okay. So I'm in the money, meaning I'm less than the strike price on a put. Now, the next thing I'm gonna look at is open interest. Well, there's 15,940 in open interest for this chain. It's a lot of liquidity. And I say 100 is the minimum, 15,000 is fine. Now, the next thing is spread. Okay, well, the spread is the difference between the ask and the bid. Less than 10%. Well, this is only 8 cents. That's well below 10%. 10% is like 26 cents, okay? So it checks the boxes. From here, I know exactly what strike, I know what the ask is, and from here, I'm gonna set up the trade. So in Thinkorswim, this is how it goes. Like I've said, almost every other trading account that my customers and clients use run the same model I'm gonna share with you. Obviously, it's gonna look different where the buttons are, but these are not proprietary entry orders that I'm gonna share with you. Not proprietary at all, common. So here I'm gonna go buy custom. I'm gonna set this up all on one ticket. So OCO bracket. So now you'll see there's 3 tickets, but it's one order, okay? There's 3 line items here. There's 1 green, 2 reds. The green is the entry order. That's the buy order. That's in green. The 2 red are sells. You can see it here where it says buy and then 2 sells. They're connected, they're tied together. They're not independent signals, tickets. It's one ticket. So the first thing I'm gonna do is I'm gonna set up the limit. Okay, I want to set a limit here. Now, you're going to see a contingent order setup in combination with an OCO bracket. That is the technical process that I'm going to give you right here. The non-technical market is we're going to set a ticket, one and done, and have automatic entries and exits. It's basically autopilot once we set it up. It's like setting up in autopilot. Let's say we're in a Tesla, you want to go on a road trip, you set up the GPS, you hit go, they're on the highway, it'll drive you there, right? I mean, same thing here. We're going to set everything in advance. We're going to plan our trip. We're going to know when we're going to go to rest stops. We're going to know when we're going to go have to fuel up and get our energy and our electric refilled in our Tesla on our road trip, right? We've got to plan out our trip. That's what this is. Okay, so when are we going to leave? When are we going to go? Well, we're going to go at the right time. Well, we're going to go and only go if Uber marks less than or equal to 25.87. We're trying to catch a bearish breakout, a down move. So I'm going to come in here and I'm going to tell my broker, I want to buy 2 contracts of Uber. Here's a strike, $28. I want to buy the put. I'll set the limit in a second, but I have a condition. I only want to buy this if Uber marks less than or equal to, drum roll. Oh, it's simple. It's the 25.87. We've got it on the chart, right? That's our entry, 2587 in blue, dark blue. Okay. So now I'm going to set autopilot up. Okay, we're going to take off only if we get the breakout below 25.87. Now the limit here, this is the condition to execute the trade. The stock must mark less than or equal to 25.87. Now we're going to add another level here, which is the limit. Okay, this is a cap effectively, because if this breaks out, let's say this gaps down $5, it can happen, right? If it gaps down $5, this limit of 264 will not be there. It's gonna be like $3.50, $4 maybe, okay? It'll spike. So to avoid paying more than you wanted to up front, I give out limits, and I'd show you how to set the limit, but this is how we do the limit. So I'm going to take the end, and if this is complex, you don't have to memorize this today. I have this empowerment toolbox. All my traders have access to this resource site. All the resources are here, all the video support. You have all the archive sessions that I host live, resources like the checklist, how to place trades, trading lessons, watch list. There's a new checklist that I've added, right? All this is available to all of my traders forever. They have access to this data. Okay, so you don't have to memorize this piece. I'm just walking through out loud. It's definitely recommend you practice this. Okay, so to set this up, for those that know what I'm talking about already from a traditional level, all I'm doing is getting from the last price, which is 26.24, what the distance is to my entry. Okay, so 26.24 is the price, the close price. 25.87 is my entry, my pending entry price down here. The distance is 37 cents. So to understand where to set my limit, I need to understand how this limit will move if Uber drops 37 cents and takes us into the trade. Okay, that's all I'm trying to do. So from here, what we'll do is we'll take the 37 cents and multiply that by the delta. Okay, like I said, if this is too complex for you, don't worry. I teach this all day long. Okay, I take that, multiply it by the delta, which is 65, and I add that 24 cents to the ask, which is 264. So I have a high side limit now. So I set now the limit at 288. Okay, you can read it down here. Here's the description. Submit the following order: buy 2 contracts Uber. Now this is how I track the trades. This is our trade tracking account. How many contracts you buy is up to you. I do not give personalized advice on individual account sizes. I have 2 because that's how I track this stuff, by account of 2. You trade whatever fits your portfolio. It's not me. Okay, I'm not telling you to buy 2, 3, 4, 5, 6, 8, 10. This is how I track it. But you can read it out. It says you're going to buy this at $2.64 or better. Okay, see that? That's the limit. That's the definition of a limit. Well, it didn't take you yet. It's going to say 288. There you go. 288. Okay, that's the limit. 288. Well, down here it says wait until the following condition is satisfied. So no matter what up top here, it will wait until the following condition is satisfied. Mark price of the security is less or equal to 2587. This will only go if Uber, number 1, must be lower than 2587 tomorrow. It must. If that doesn't happen, no trade. If this is lower than 2587 and the limit price is never at 288 or lower, you will not execute the trade. You need both of these to go live. First the price, then the limit must be there. That's what a limit does. But this could go to $25. The ask could jump 50 cents and never come down and just keep running. You wouldn't be in the trade because you capped the limit. Okay, just want to put that out there. So once we have the pending buy, now we set up our closing orders. Okay, bracket, one cancels the other. So from here, I'm gonna do the same thing, except change my exit to a market. I'm not driving my profit or stop loss by the option premium. I'm exiting based on the underlying stock. So price rules market. This is my stop loss. So my stop loss is going to be above. So that's 2847. There's my stop loss, 2847. Then I'm going to set my profit target. And I'll show you what the confirmation looks like. It's all tied together. All of these are good to close on the profit taking. Okay, so profit taking, stop losses, I want those trades to be good and open until they're closed. So now my profit target is 2294. I'm going to put my profit target in. 22.94. Okay, so when I come to the confirmation window, you're going to see all of the details I just talked about. So in green is the entry, right? So buy 2 contracts with a limit of $2.88 on the condition, right? See the condition of Uber marking at or below 25.87. Then I have 2 sell orders. Whatever hits first will cancel the other. That's what the one cancels the other is. I've got my stop loss, 28.47. I got my profit target, 22.94. So I already know what my max loss is because I already have a built-in stop loss, right? I've got a max loss. Okay, I already know what my risk is. I know my max profit. They have that skyrocket at 5,000. Okay, so I've got a good risk-reward ratio. Okay, so once I hit enter, it's going to go. And mind you, right? It's 5:30. Market's closed. Been closed for an hour and a half. It's closed. Now, once I hit submit, now I go to my working orders, and you can see here is my Uber trade waiting. See, waiting conditionally. It's now active, and it's good for tomorrow. At this point, I don't have to look at a chart ever again. I can come back to the charts 2 weeks from now, 3 weeks from now, 5 weeks from now. If this triggers tomorrow, everything is set up. I set this up at night. So when I send out these signals, and I'm probably going to send this out, so I appreciate the extra help here. This trade's going to go out to my traders, this Uber short, okay? I send it out via text message, email, as well as a live trade tracker to follow along with, okay? So everything's given out, everything's laid out exactly as I showed you previously. That is a structured trade identified and found using filters based upon the overarching pattern in combination with momentum. And there's probably more trades in here too. There's probably more opportunities in here to set up. Okay, let's see aggressive bearish. That's why my trade, there's 98. Holy cow, it's a lot in that one, isn't there? Goldman Sachs just breaking the trend line, right? Marriott on the bottom of the trend line. These are aggressive because they're at the initial moment of a potential breakout reversal point. See the charts? Maybe you can't see them. Okay, see the chart? It's the first reversal point. Big volume. Crossing down. That's a good one for Bill.com. Discover. Okay. So now I'm not worried about a pre-built list. I am looking and I'm finding pattern related stocks. How many of you would love to be able to pull up a list, spend 5 minutes going through and seeing which one has the best breakout move, then being able to set a trade in advance and being done with it? Type in yes if you would see value, if you would enjoy that level of trading. You find it, show you how to set it up, show you how to find the targets, set up your trade and be done. And then all you're doing now is seeing what happens tomorrow, because we can't move it. We cannot move the market. As retail traders, we cannot come together as a group and say, oh, let's all go buy something and make it move. I mean, we could on some penny stocks. We definitely could on some peripheral, small cap stocks. I'm sure we could get enough of us together. I've got hundreds of traders in my trading room. I'm sure we can make it move, but that's not sustainable. Okay. So we're solely trying to find where the pending money is going to come. That's really what we're doing. We're finding where money is actively engaged in, where do we see a spike in activity, and then we're bolting on behind it. Now, you don't have to learn this model. I do highly recommend you understand how it works. But if you like this style of me finding trades like we just did with Uber and having me send them to you, how many of you would like that, where I send you trades like Uber, right? Trades like this. Trades like, here's a recent one with United Airlines, right? Trade right here, just hit profit target today. Shorted it up here, took a profit, hit the profit target. Okay. There's also Pfizer. Here's a recent Pfizer trade I sent out where we sent out the trade. This trade is currently, where's our P&L on Pfizer? Here's Pfizer up here. Okay. So it's up 40%. This is a new trade just of the 9th. So in 6 days, active trade up 40%. We have a short, this is GE, so it's the buying a put on GE. Sent out every piece of the puzzle instruction. Okay, got in up here, triggered the trade the next day on the 5th, on its way down to profit target. So inside of the details of the trade, okay, this is the trade tracker. Okay, so this is where we track all these trades. So full listing details of all the different positions, open trades, new trades, closed trades, all laid out. You see, every single ticket I provide the traders with the screenshot of the actual ticket. So this is that GE trade. So this was set up. I set this trade up on the 5th. You see the time, it might be hard because I can't zoom in too far, but this is December 5th. It's 6:42 p.m. Here's the ticket. We wanted to buy the put, $85 strike on the put. We had a limit of $3.68 on the condition that GE marks at or below $84.61. Okay, we have our stop loss 88.39. We've got our profit target 76.25. It was set up at night on the 5th, the day before. So you can actually see exactly how it was set up. So coming back into the actual trade, you'll see there's GE, there's the time. This filled on the 6th at 2:41 in the afternoon. There's the $3.65 premium. GE is also protected with working orders. There's my, I had 2 trades, but there's my working orders for GE, okay? The setup, usually for someone new, is probably about 15 minutes to take what I deliver. I send to you, once again, text message. I'll show you what the text message looks like, but text message. You'll also receive an email with the details, and then, of course, you have access to the trade tracker. Now, the visibility to me is really what makes this type of signal service stand out from the rest, because everything is delivered up front to you. If you've subscribed to other signal service programs, I know a lot of them. I have very close ties with many of the top traders in the space today. Many of you may have seen me with other groups as well, because of just my tenure in this space. So ultimately, I know how things are delivered. Now, nothing's intentional. The other traders and experts that I talk about, they're great. They have great products, great services, but the method of how they do it is different than mine. I like to deliver everything to you, because one of the biggest complaints I ever see when it comes to trading signal services, the biggest complaint has always been matching the results of who they follow. So if I just sent to you, as an example, if I just told you to sell GE at this price, and I didn't tell you the stop loss, I didn't tell you the profit target up front, you are then beholden to me, right, to tell you what to do and when to do it. So if I said time to sell it and get out, how would I deliver it to you? Well, more likely email, text message. There's at least an hour lag. I send lots of emails, lots of signal alerts. It takes about an hour to get everything set up and then hit the send button. An hour is a long time in the financial markets, can't it, right? That is where you'll start to see a distance, a gap between what is marketed as results and what you actually can receive in your account. You know, if you match up your trades, there's going to be a small variance. I mean, there should be a variance of 2 to 3% because of every broker has different timing. Okay, so every different broker has a different market maker, has different pricing to a small degree. But you shouldn't have a 50% difference, right? If I had a 100% winning trade and you had a 50% trade, that's a big difference. So delivering it up front, to me, allows an easier way to follow more precisely instruction. Now, in that example where I had to manually send you out updates, what if you didn't see the email for 2 days? What if you were out of town? You could be wildly upside down on that trade by the time you come back. To me, that's just not a pleasant place to be in a state of indecision and lack of clarity. So intentionally, I went out and came up with a solution where everything's done up front. So once you set it up one time, you are in it and everything's protected. Stop loss, profit target. That to me is one of the biggest differences between this. So with the double-edged approach of learning the method, following along with my cherry picks, that to me is where I have the most passion around teaching and coaching, because I can show you, you can get an email delivered to you, pull up the symbol, pull up the exact trade details, and see exactly what I saw. Because by using this method of finding the search criteria, all of my traders right now that go to the aggressive bearish breakout, every single one of them are going to see 98 stocks in the list. They're all going to see the same stocks that I see. And that makes it dramatically easier to coach to, because there's a minimal level of subjectivity to this method. We are dramatically have shifted the scale from subjective to objective. And that is where I believe repeatability comes into play. Being able to repeat a process starts with a consistent and reliable method that is shared amongst us all. That is how we're able to provide a repeatable process, because all of the steps to get to the end result is objectively based. Once you can understand the relationship as I've been teaching it, you'll start to pick this up in a dramatic way. I'm just going through questions as I was looking at this. Now, another promise I had initially, because what I'm going to do is I've got people asking, how does the program work? What is this program? What does it entail? How much is it, right? So as I promised to you early on, I told you I wanted to do things differently. So I partnered up with some amazing team members. Some of them are here facilitating this. You can see them in the organizer section. They've been chatting with some of you as well already. Amazing people to help accomplish the goal of providing a different way, an affordable way to learn how to trade and take advantage of momentum and trend patterns. Now, today I've been focused on finding trades. Okay, there's also a similar approach to analyzing and forecasting the SPY, the NASDAQ. I do it all day long. That's why I was not shocked about the red days. We were not shocked as a group. We already had a plan. We knew what to expect. We know if X happened, expect Y. If Y happened, expect X. We already had the plan laid out for the past several weeks. So that's the level of analysis that's also found. This method is not a one-trick pony. This method is used for stocks, ETFs, futures, Forex if you like, crypto if you like, same base approach here. The difference is how you trade it, because those markets are different on how you invest in them, but the structure of finding breakouts is the same across the board. And I'm just talking about breakouts. I mean, there's other spectrums of trading that I teach, high spectrum, low volume spectrum as well, that I teach to. You have checklists too, there's training around it to further expand your trading. So at this point, let me take you through a brief tour of the program, the featured program today, which is the Signal Service Program. And I have the bonuses that I want to give away that will empower you beyond just taking an alert from me. So this strategy and the delivery is this method here, okay? So I'll tell you when to buy it, when to sell it, and when it's time to hold it, okay? And that's all done through the Signal Service Program. Now, when we get down to some of the basic questions that come up, okay, things like what do you need to follow along with? Well, you need to have a trading account. You need to either have a trading account or you have the capital to open it, you just haven't done it yet. I just, if you're not at that stage where you're ready to actually participate and follow along, then it's best just to wait. I mean, sure, you can learn, but to me, I want you to be able to take advantage of this. Now, this is what the actual alerts look like. This is a forward trade, so this is forward right here in the middle. This is from last year. But the detail of information I want you to pay attention to. There's the symbol forward. We're going to buy the call. You selected the November expiration. There's the strike. There's when you buy it, 14.96. There's your stop. There's your profit. Okay. Full detail on the text. On the right, full detail on an email. Okay. So you have both methods of communication. These are sent out 7:30, or excuse me, 7 o'clock Eastern, between 7 and 9 Eastern, 7 o'clock to 9 o'clock. That gives you 12 to 14 hours to set the trade up. It takes 15 minutes starting off. When you get after the first probably 2 weeks, it'll take you probably 5 minutes or less. After about a month, it'll probably take you 60 seconds or less. Okay. It's not difficult. It's just a different buttons, and just get familiar with where to click and what to click, right? I give you the ticket so you can literally see my ticket I placed, and you can put it up to your ticket and make sure the ticket matches, right? Try to overcome any type of issues of matching up how you're supposed to do it. So you can do one of two ways, or you can do both. You can take the signals, you can learn it, you can do both. I prefer you do both. Sure, take the trades. You're busy, life comes in the way. Sure, get the trades. But ultimately, I appreciate it if you can at least come to a few of my live sessions, so I can actually make sure you understand how we pull them, why we pull them. It's a live environment, so you can ask questions on why I picked that stock over this stock. At least 2 or 3 sessions, and then you can go to, you can go fishing, and I'll give you the fish. Okay, but at least show up for a few sessions so I can ensure that you understand the method. I want you to know the why behind a trade. You don't have to do it yourself. You don't have to be a proficient user, but at least you understand the method and you're not blindly following a signal. Though I have no problem if you do it, but I just want you to get the most out of this. Now, at any point in time, in that first 30 days, okay, there's a 30-day time limit. You're about to see all the bonuses and all the time and the amazing price that I have for you today. Super low price. You're going to be blown away. I put a lot out there, and the reason we're able to provide such low pricing, once again, is because of the infrastructure we built. We built it a different way. We do not have 50 salespeople on the phones calling you every day trying to sell you a new product. We don't have that intentionally. We don't have a huge marketing budget that we spend hundreds of thousands of dollars a month with. All of those expenses drive up a cost of a program, right? Those are overhead of a business. I already said, I promised that I didn't want to do things the same way everyone else does. I want to do this differently. So we're able to provide amazing low prices because of the number of clients that we have. Now, all I ask is that you evaluate and you make a decision. You don't have to make it today. Make it within the next 30 days. Get signals, come to my class, come to my sessions. At the end of that, if you're not satisfied for any reason, we're not going to ask you what the reason is, but whatever reason, just email us, email our support team, and say, I'd like my money back. And we will give you 100% of your money back, no questions asked. There's no hoops to jump through. There's no steps to complete. Now, I ask of you to show up to some of my classes. That's a personal ask of mine. I think you'll love it. It'll be transformational. So I ask that of you, but that is not a requirement to get your money back. I want to remove any of that risk, any of those hoops. I think it's foolish. I don't think it's necessary. But that is there in your back pocket if you need it. Now, the performance, I've shown you recent results, not results of months and months and months ago. I've showed you results in the last 30 days, last few weeks of how this implements and how this is traded. One of those trades would take care of your entire year of these signals and have you profitable, double profits on your investment. Just one of those trades I showed you, just one. That's how low price we have this because of the infrastructure and decisions we've made as a business. So all in all, if you're looking for a way to add trades, profitable opportunities to your account, you can do it passively or you can be active with us in our sessions, whatever best suits you. The program is email alerts, SMS alerts, access to the cloud trade tracker. Okay, so full transparency around the signals. All the deliveries are done to you throughout the week. Okay, if there's updates to a stop loss, updates to a trade, I send them out after the market closes. I do not send market orders. I won't say, hey, close out this second, close out everybody, because I already know there's a lag to data. There's a lag from me to you in communication. So I only send out updates at night. So that way you have plenty of time to set everything up and not worry about missing the mark because the market's open and moving away from you. Okay, everything's gonna set up in advance of. Now I've got 4 bonuses that I'm gonna give to each and every one of you with this opportunity. The first one is live training sessions. I'm gonna give you access to my Empowerment Toolbox membership area, a Mastery Academy for options. If you wanna expand your options, I wanna give you an amazing membership site there too from us, and of course, money management, okay? So the first bonus, when you sign up today, is access to my Market Pro Live Club. Twice a week live, Mondays at 7, Thursdays at noon. I had one earlier today. Every week, I'm live. These are average about 2 hours a session. We go through analysis of the major indexes, the S&P, the NASDAQ, the Russell 2000, the Dow Industrial Average. We go over oil, we go over the VIX, we go over the US dollar index. That's our macro high level analysis. That's our forecasts. Then we drill down and we identify sectors that are breaking out: finance, energy, utilities, consumer staples, consumer discretionary. We go into micro niches, right? Like natural gas. We'll look at uranium-based companies, right? I mean, we'll find different areas of the market to focus our attention. And then we go into trades. So we'll go into trade setups. People bring questions about trades that they're in individually. People ask trades about how and why we picked a certain trade or not. So it's a full encompassing training and live analysis and trading support in these sessions. I have the most fun in these because we're in the market, we're in the current conditions, and we're able to take advantage of the market. This, we've sold independently. I'm gonna give this as a free bonus. A full year of this, 12 months of this included on me. The second bonus is the toolbox. This is where I have all the checklists. These are 2 of my favorite components, but there's much, much more in this toolbox. You have pre-recorded lessons on the strategy, how to use trend lines, how to use the momentum, how to set up trading view, how to use entries, profit targets, stop losses, how to read option chains, how to use the checklist. These are all in total about 12 hours of pre-recorded content for you. All and every checklist I put together is all available here too. So I want to make sure you have this toolbox. Mastery Academy, another great bonus. If you're new to options or if you're experienced but you want more strategy, you're going to love this academy. So you don't need a ton of options experience up front. I'm going to make sure you know the basics to get up and running, how to set the trades up, and then as you expand, you'll have access to more advanced options training. Now, one of the most, I think, least focused on areas of trading is money management. So inside of the Empowerment Toolbox are 2 key calculators for money management: a growth and scale calculator and a risk calculator. So that way you can come up with your own management plan based on your own situation, as well as various lessons on that topic in this 4th bonus. So when you take a look at all the bonuses and the program of the signal service itself, it is a total value of over $8,600. But we are running $399 for the year is the cost. But the first 10 right now that go to rapidprofitsmethod.com, it's plural, Rapid Profits with an S, method.com. The first 10 that use the coupon code MAT150 in the coupon code will save $150. So for $249, you're going to get all of the signal services for the entire year, plus Market Pro Live Club sessions with me live for the entire year, the Empowerment Toolbox, the Options Master Academy, as well as the money management portion for just one price for the entire year for $249. As I said, you're going to see an unbelievable price because this same level of offering in the industry right now is thousands of dollars, $2,000-$3,000 for the same breadth of tools and resources. I'm not saying it's the same, but the level of content is the same. And remember, the only reason this is available is because of how we made our business decisions to create this group and this company, because we wanted to focus more on the masses. I wanted to help more people, and to help more people, we had to change the dynamics of how we operate the business. So we leverage partners like Investors Expo. That's why I'm here with you today. Rather than us having a huge spend of marketing that we've got to cover in the cost of the product and the program, we're able to leverage relationships, various other resources that can draw down the overarching price to give you an amazing opportunity to lower your business cost. So for $249 for the whole year, you're getting all of this support, all of these resources, all of my time for the next 52 weeks. That's $20 a month. Right? It's a little over $20 a month if you break it down month to month. I don't know what else in this space can provide this much access, this much level of support and insights and trades for that type of price. So every single one of you that are trading, trade more than $249 a trade, right? So as I stated, just a few recent trades here would have paid for this and much, much more. You'd be in the profit in just one single trade. Half a trade, you're covered this cost for the whole year. So give this an opportunity, give you 30 days, and I can assure you that you will love this. If you don't, if you're the small percentage that don't like this format, don't like this strategy, don't like my lessons, my teachings, then just let me know and you get 100% of your money back. Yeah, so on that checkout page, I'm going to show it to you so you don't get lost, okay? I want to make sure you know you're in the right spot. So the rapid profits method is a short redirect link. It's an easier link, easier URL to type, okay? But it is a short link, and I'm going to show it to you so you know, once again, you're in the right spot. So if you type in rapid profits, it's plural, okay? Plural. It's going to redirect you. You'll see it change, and it's going to take you to the secure checkout page, okay? So once we go to that checkout page, you're then going to go down to add to cart, okay? So or you can read more on it. It's up to you, okay? So you got the full write-up. You got a little bit backstory about why I created this program. Now, this is not the options profit generator, okay? This is a different signal service. I don't send out duplicate trades, unique trades. These are all unique. There's no crossover. The buy, sell, and hold rapid profits method is a open canvas for me without any limitations on what I pick. Now, I always stay below $80, typically $90 stock prices, unless there's a good option trade set up. So these trades do not overlap. If you're one of my options profit generated clients, there's no overlap in signals. This is more signals, okay? Now, if you're new, first time user, this is a phenomenal place to start because it'll get your feet wet and it'll help drive your outlook on how the process works. Every one of my traders go to one trading room. Now, when you go to click here to enroll, it'll take you to this add to cart page. So when you add it to cart, you're going to see all that you're getting today, okay? And I'm going to show you the coupon code. So down here on the bottom, it says coupon code. So click there and type in MAT150. Down below, you'll see the price is $3.99 currently, okay? When I hit apply coupon code, it's going to come down, it's going to drop the price, $249. Now, if you are looking for more, we have more if you want to add on to your cart. We've got the options profit generator where you can sign up month to month. Cancel at any time. This is also included in the 30-day guarantee. This is more signals. This options profit generator is daily signals, and it's for low cost premium option trading. So these are on average, your premiums are $2.60 is the average. So these are primarily focused on your lower premium priced option contracts. So if you want more, then add this on, it'll add it to your checkout, $39 a month. Normally you pay upfront for the year, but this is a special offer here. Now down below, we've got a special where you can add on special reports These are amazing long-term trading type checklists. So Titan Investors 4 Beast checklist, that's from Bill Ackman. You know who Bill Ackman is? He's one of the top hedge fund traders out there. You've got Investing Secrets of Warren Buffett, Sir John Templeton's Law of Investing Success, and you've got a momentum breakout trader video. Okay, that's normally $700. We've sold that independently. You can add this on for our holiday special for $49 if you'd like. We are going to include a special bonus. It's unannounced. Okay, when you order, you're also going to receive on us the 39 investing secrets of the titans of our day. This is pulled a collaboration of the top secrets from the top hedge fund traders. You're going to get a special report called the Titans 100X rule. This breaks down in detail how and what methods Titan investors use to find the next 100X stock. You'll see examples of like Tesla, right? How do we find the next Tesla on the initial IP listing, right? How was that identified, right? How do we find the next one, right? That's what that gives you, and that's going to be on us. And then of course, you're going to get another special bonus of money management, the profit calculator, the Titan investors, okay? All on us. That's another special bonus you're going to get. So for it's just crazy. The more I say it out loud, the more crazy it sounds. $249 for the year. It's not month to month. That is for the whole year. One-time payment, the whole year. As long as you stay active, if you want to continue, you'll lock in that low price. This is the last session of open enrollment in 2022. This is the last time you will see the price at $249. Just like everything else in life, unfortunately, right? Price goes up at some point. Okay, so this is going to be your last chance to lock in this price. And it's not today, we're not that hardcore on this urgency, but 3 days, 5 hours. Okay, so this will stay open and active for the next 3 days. But I say start today. I have class on Monday, 7 o'clock. So you'll be able to take the weekend, spin up on all of the lessons in the membership area, and then come Sunday night, when you get our next signal, you're going to be ready to go. And you'll be able to join me live at 7 o'clock Eastern and be able to take full advantage of this program. So if you're going there now to that page, let me know. Just say, just type in RPM in that question section. I want to make sure my team that's moderating this can keep their eye on your order. They're going to make sure your emails went out with your login, your receipt is delivered to you. I'm going to keep them here. So if you have any questions on the sign up page, I don't know if you noticed, but it took me a while for this to load. It normally doesn't take that long. The only reason it took long to load is because there's a lot of you on the site. So if you're on the site and you're running into any slowdown, or if it's glitching on you, let me know. Okay, we're here to help. I got my team here monitoring the question section for us. I want you to also take this information down. If you need any support, you can email us. I've got, let's see who's helping me here. I've got Alan. I've got Kim. Okay, so Alan and Kim are here moderating. If you have any questions, you can call here, you can text here, whatever's easy. And then you can also email, and that'll create a ticket. And we'll be there to facilitate and assist you in this process. It's as straightforward as it sounds. It's $249, gets you an opportunity to get my cherry pick signals, and then gives you access to my live trading sessions, all the different tools that I leverage, all my watch lists, all my checklists, options training, money management training for just $249 for the year. As long as you lock in and keep active with us, you're going to lock in the price. Okay, that's the benefit of being able to sign up here before our price increase in 2023. So return on investment, action oriented. You've got to be action oriented, right, to take advantage of the markets. You got to be able to push the button. I'm going to be your coach liaison to help you get to that point. Let's see. Access denied. Yeah, I'll see. Well, it's probably still processing the back end, but I have my team here, FW, and we'll get you all squared away. They'll double check for you right now. Yeah. I see them responding. Kim's on there. Yeah, what page are you trying to get to? I don't know what page you're talking about. Yeah, we just had a session early today. Yeah, just let me know. We have Kim here. Just be a little more detail. I got Kim here. She'll help you. Yeah, so I have questions. Do you trade inverse ETFs? Yeah, yeah. I mean, so what we run in these sessions is the first like half hour is set aside for the big macro analysis. So making sure we all have a game plan for the greater overall market, directionally speaking, key, like the S&P 500, we talk about that at length, and NASDAQ at length. So we have a good overall expectation of what the market's going to do. Then from there, we'll drill down into the current condition. What is best, what strategies are best right now. These are areas of the market we'll go through and say, look, this is where you want to look for buying opportunities in this sector because of this pattern, because of this reason. Then we have an open session where clients are asking, hey, what about, this stock? What about this option? So then we'll go through in a group, and I'll do it live, and we'll go pull up the chart. We'll break it down to help provide more analysis on a specific trade. If it's a method like ETFs for hedging, we'll bring that up. We use a lot of ETFs, exchange traded funds. We use them for sector analysis, industry analysis. We look at them for individual trades. We've looked at futures, whatever the current conditions provide to us, we're looking for opportunities based on the market condition. There's times where it's not ideal for breakouts, so we'll trade counter trend trades, right? Like the UAL, American Airlines I showed, that's a counter trend trade. It's a breakout, but it's a counter move. The GE trade I showed where we're selling a high, right? That's a counter trend trade. That's because right now, that's a better strategy. Now, the middle line breakout of the 50-day, that is traditionally for a strong, clear directional market, be it green, be it red. When the market, as the SPY's done and the NASDAQ has done over the last couple of days, where you get these large whips in a range, okay, it's better to be trading, selling the high mark on the way down, right? So at the beginning of the year, as the S&P 500 NASDAQ went bearish, we were trading at a high level energy. For the first 3 months, all we traded was energy related stocks because that was the sector that was breaking out bullish while the rest of the markets were bearish. All right, so the summer when we hit the June low, right, you can go back to our archive classes and watch how we called that low and how we traded that bear bounce. October, we did the same thing. Okay, so every week, there's a market shifting that we need to align our trading with. So that's why we spend so much time working from the top down in our analysis. So I talked about it Monday night in our Market Pro Live Club. It's archived. So all of you that are signing up, once you get logged in and get credentialed, you'll be able to go to our archive sessions, go watch Monday night. I talked specifically about what to look for in the markets. What was the projection of the S&P? I knew we were going to be back in the zone on the bearish side because we went through, and that's what the pattern showed us. If you want to see how we called in January, go watch the archive in January. Watch the first half hour of it. It's 2 hours, but watch the first half hour. You'll see us break down and identify the bearish breakout in the overall market, and then you'll see us identify the bullish breakout in energy. And we traded a whole lot of energy, right? So the reason I say it is because the markets dictate the overall architecture of what is best. And so by using the same base approach as I showed today, and today was a tip of the iceberg. I mean, the way we use and leverage the moving averages, the way we leverage high volume, low volume, retracements, extensions, profit target taking, stop loss management. There's only so much time in an event like this. I know it went 2 hours, but there's so much of a transition to what you see. And I'm not talking, when I say a lot, I'm not talking about effort. It's not going to take you months and months to figure this out. It takes you a few weeks to see it work out, right? See the analysis, go back and see me 2.5 days later, right? That's the sequence. 7 o'clock at night Monday is intentional. Thursday at noon is intentional. It's math-based because 2.5 days between each session. After Monday night, we analyze for basically Tuesday, Wednesday, half day Thursday. We meet at noon. Then we're prepared for the rest of the afternoon Thursday. We're prepared for Friday. We're prepared for Monday. Every 2.5 days, we're on top of this market, running analysis, making adjustments as the market changes. That allows for the lack of anxiety because we always operate on a mindset of expectations. What do we expect next? Well, to understand what to expect next, we have to understand what just happened, right? So the what, the when, and the how. That's the transformation. I'm not going to introduce a brand new unseen indicator and have you learn 500 new strategies in the next 12 months. The strategy I use for this method is the same method I use for all of my trading. It's just the difference is, am I trading an option? Am I trading stocks? Am I going to be trading a covered call alongside of the stock buy, right? That's where we get into the current condition and evolve and build off of the base strategy. The base strategy is what I showed today. But what we do with that expansion of that base, how we layer on additional techniques, additional tools, that requires hands-on training in that scenario, in that market condition to see it play out. But it's all based on the same overall moving average and volume combination. Now I'll introduce fractals to help highs and lows, right? Understanding and visually identifying highs and lows is a pivotal point of reading a chart. So I'm going to teach you that. I'm going to teach you how to leverage the various trend lines, the correlation of the 10, 20, 50 to help identify more opportunities, right? But like I said, there's only so much to teach in one, workshop like today. But if you liked any piece of it, imagine $249 is a drop in the bucket in terms of the total time spent with me, the total access to the various resources that I put out there to my team, AKA you are my team, right? That I put out there for the team so we can break this market down into bite-sized pieces, always with a mindset of expectation. If we have an expectation, I said it Monday, expect the red days. Do not be shocked with red days. And I clearly illustrated on the chart, I said, this is what we're going to look for. This is what the hurdle is for us to get to an uptrend. We're not ready for a sustained recovery yet. A chart, and that's on the chart. I'm not talking subjectively. I'm not talking about my opinion. I'm talking about what the charts are showing us. This is not the moment for that massive upside recovery, that massive bull run yet. We have time for that to play out. But that doesn't mean trading ceases. That doesn't mean there's no opportunities. It means we have to shift into a different method using the same strategy. Instead of buying the cross, we're going to be selling at a high, taking it down to the 50. Snap up, snap down. It's a technique I teach. All of those methods combined is where we get to this point where we can have expectations. You'll be amazed. You'll be like, oh, I knew that was coming. Of course that was coming. That's what the chart was telling us. That's what the activity was telling us. It's an amazing transformation. I love hearing that feedback of the transformation in the rooms. All right, so if there's any questions on the checkout page, let us know. If there's any questions on the program, I'd love to hear them. But at this point, I think it's best to really just join us, okay? Start today and start digging into the information. And then come Monday in just a few days, I'll be with you live and take you through step by step. Any questions that you have, really help put it all together for you. And then after 2 or 3 more sessions, you'll get it. And for me, if you can do that, you'll know if this is going to be for you or not. You'll know within the next 2 weeks if you see the long-term value of us working together. And if you can't, then that's fine. Just let us know. Just tell us as soon as possible within that 30-day time frame, because as you can see, we put a lot of content to you. yeah, I just come from an age where, I believe that we should always part as friends. There's no reason to hold somebody in, to lock them into something they don't want to be a part of. All we ask is that you just do it in a timely manner. That's all we ask. Yeah, 100%. Everyone has access to all of my archives. So all of my archive sessions are available to you. So when you log into actually, I'll just send you this site right here. I'll send it to you directly. I'll send you this link right now. You can pull it up. So on this link, I just sent it to you. So on that link, if you go down to you click on the archives tab, you'll see all the previous archives. The shortest trade, I mean, same day, but that's, the average trade is 21 days. Average span is about 3 weeks. Fastest trade's been same day, entered in the morning, closed at like noon. So real fast up and down. I mean, traditionally that does not happen. If it's a fast trade, it's usually a day or two. I don't want same day because, there's a limit to that because you have the pattern day trading limitations, pattern day trading rules. And most of my clients are not pattern day traders. So typically don't get in front of those trades, but usually about a day or two is the fastest. Here of late though, they've been faster. I mean, we haven't had longer sustained trades. I think 2022, it's been like 14-day average, something like that. It's been lower count. Now, these are single leg options. So we'll talk about multi-leg options in the sessions, as they come up. I've got a lot of clients that trade multi-leg condors and whatnot. So we'll talk about and the clients, the traders that we have in the room are very active, very supportive. It's very rare that we have a question that, if I can't answer it, someone in the room can answer it. So we have an amazing group that attends these sessions that are open to help each other. Great dialogue. Like I said, if there's anything I'm not familiar with, I'll bring it up in the room, and then next thing you know, we have 5 or 6 answers as a collective unit, which is a fun environment to be in. We all have the same like mind, same goals. We have an affliction for the same method of trading now that they've been exposed and been trained to it. Like I said, it's not just for the signals I send, it's literally they use this method across all of their portfolio. Even retirement account trading, they'll leverage the same concepts to identify, when to shift into different sectors, different types of mutual funds, investment funds, things of that nature. Talk a lot about different ETF style trading. Well, the room is always closed and protecting the chat. Never had a good experience with just open chat because you could have those, it's two-sided, right? You could be over enthusiastic, over helpful, and next, it's a distraction to the room, with dialogue in the background in the chat section. So any questions I'll put up there in the room and people will help and I'll facilitate the questions. But I just never had a good overall production value of having an open chat session. I mean, maybe something we'll think about. Maybe we'll just do a dedicated one like that. But share a lot of resources, share a lot of free sites that you may not be aware of that can add huge value without any, like, I'm just anti-software, anti-expensive software. I'm anti-excess investment into technology tools, research tools. You know, if something's really worth it, then sure, I'll recommend something like that, but it's very rare. Most of the time I have access to a free resource. Could be a calendar, economic calendar, could be a hedge, like a hedge fund style analysis, free resources that are out there. I mean, there's just, I don't know, I've just been jaded by overpriced tools and such around this industry. I'm just jaded by it, so I like to do things a little differently, and I can't do it for free. I've got, but I can definitely do it in a manner where it's affordable for most people and still plenty of value for the cost. And based on our business decision and business philosophy, we're able to do it with technology and different support mechanisms to keep the prices affordable. So. No, I know that. I know the MTI group. Yeah. Yeah, I know Dan. Yeah. Oh yeah. So I'm definitely a contrast. So MTI is where I worked there. That's why I was the chief revenue officer. Yeah. Yeah. Tell Dan we met when you speak to him next. When he's off site from home, he works right next. I have an office right next to him. So yeah, I've worked with Daniel for a very long time. I mean, him and I have known each other since I actually hired him at NTI in, geez, was that 2009, 8 or 9, I think. Yeah. Yeah, so I am a distinct contrast in pricing. I know exactly what the MTI model is. So, but there's some great product. There's some great teachers there too. Yeah, I have a lot of good relationships there still. Yeah, so question on bullish or bearish, there's an overarching direction in the market that exists. Okay, so there's a heavy weight, right? So even when the market's bearish, it doesn't mean there's no buys. Okay, same thing opposite. When there's a bullish market, it doesn't mean there's no sells or shorts, right? Sequence of timing between sectors rotate. Okay, money rotates. So as that occur, as those situations occur, there's going to be areas where there's a better sell than a better buy. So like a few nights ago, I sent out a buy, a call in one group, and I sent out a short in another group. So sectors have a different type of buying opportunities versus selling opportunities. The timing sequence of when one's ready to buy, could be lagging, right? So it's never a general, there's never a only sell, only buy. Now, when the market's bearish, right, like when you have big red days, you're naturally going to have a heavier down move across the board. But it's not every stock goes down at the same breadth of distance, right? Not every stock is pushed down as hard. Some stocks can weather those bearish moves. Well, that means that that's a stronger stock, right? The stock is not in lockstep with the greater overall market. And there's a lot of those instances that occur. So there's never a general rule of thumb where, okay, only buy, only sell. Most of the time it's low volume, low number of trades, let's wait. That's more of a driver volume than direction is. And that's what the value of constantly every week being on the market. We're always aware of the condition. So I already know in advance, hey, this week more likely we're not going to have 50 new trades. It's probably going to be like 10, or it's not going to be 10. It's going to be like 5, right? Because I already have an idea of where we're at in a pattern swing, that it's more set up to be right side price action. So that's when you got multi-leg options, right? That's when some of my advanced traders, they know when I start saying sideways, they go, okay, now I'm going to trade strangles, straddles, right? They're going to trade other sideways or channel-based strategy. And it's all found because that's what we analyze. And so they already know this is what I'm going to deploy and when. All right, so that's that's one of the big value points of that constant forecasting of the markets. All right, so we got Emmett, looking forward to working with you. We got Van, Johnny, good to see you again. It's been a while since I've seen you. We got Frederick coming up with us too. We got Mark. We got Steve, Lloyd. We got Ron. Welcome aboard. We got Sharon, welcome aboard. TR, welcome aboard. Gautam, welcome aboard as well. Yeah, looks like we got a lively group here. It'll be fun. Yeah, so we only do these open sessions, open enrollment sessions, a few times throughout the year, throughout the quarter, because, you know, when you think about the makeup of the room I host, the Market Pro Live Club, you're going to all get registered for that automatically in the next 15 minutes. It's one link for all the sessions. You don't have to have separate links. So it's one link. And I've got experience in the room that have been with me for several years. I've got people like you that are just starting in the room. Okay, so I don't like to have random, you know, new people coming in at random times. So I like to have groups starting at and around the same time. So it's easier to walk through and break down, you know, the lessons. I know, you know, I got to go through, review some of the basics. And so that way, you know, we got a good startup point. And then after a few weeks, everyone's on the same page. It's like I said, it doesn't take months, it takes a few weeks, and you're getting the concept, getting the process, understanding the flow. Yeah, it's a lot of fun. You know, it's amazing in these rooms. I find myself learning just as much from the traders in the room than I think at times I'm delivering, because it's the ability to expand ourselves is, to me, you know, a lot of it is based upon people we surround ourselves with. So, you know, just like I have the full confidence to put out a straightforward refund policy, right? So that way you have an ability to quote unquote fire me, right? In 30 days, we have the same, I believe we have the same right here. So, you know, if I ever see a customer or a client, you know, treat one of my support agents rudely or with foul language, then, you know, well, I'll give you your money back and kick you out too. You know, it's just, I don't, in today's day and age, I think we don't have to come to that point ever. I think we can be amicable. We can have a good conversations with courtesy and with respect to each other, you know. So I really like to surround myself with like-minded people. And hey, I don't get along with everybody. I know fully well I can't help everyone, though I would love to. It's just not, you know, possible. And so that's why we have a simple process. So, you know, we can part as friends. You know, that's my ultimate goal. I firmly believe that, you know, in life we can get a lot more done and accomplish more things if we have grace in our lives. So, you know, it's just one of my overarching values, and that's why I love the team here. You know, the team here, we have same values, same sets of, you know, wanting to keep, you know, take care of our customers as best as possible, make sure that we can deliver. And if we don't deliver, you know, we'll ante up. You know, not everyone's perfect, though we strive to be. As long as we have a good dialogue, good conversations. You know, if we need to add something, I do it all the time. Customers say, hey, you know, can you add this to this or that? And I said, yeah, let's add it. So I'll add it to the support site. You know, especially as the conditions change, I'll add a new checklist. I'll say, okay, here's a condition, here's an opportunity, here's a strategy for this condition. We haven't talked about it because we haven't been in this condition. So let's build up a training around it. So I'm going to put together a checklist. I'll put together some content so you can see what to look for in a strategy. And so that way we are evolving, and it's all based on the condition, right? The condition will dictate what we do, but 80% of the time, the main 4 checklists that I showed earlier are the main 4 we use. The other 20% are additional strategy types. You know, if you want to trade in a sideways market, okay, then this is the strategy you want to use. You don't want to use a breakout in a choppy market, right? So then we'll transition. I'll teach a method of selling the counter trend, right? The counter move. but it's all using the same indicators. It's all using the same volume. We're just using the data and timing differently. But that's just an example of how we evolve. And to me, the market dictates what we do. So as the markets change, then we adapt and look for the different methods of profit. Thanks, Johnny. Appreciate it. Yeah, I remember you. It's been a while. I'm glad to see you back. Yeah, looking forward to having you there. Yeah, looking forward to having you there. All right, so it is now 6:30, and as you can tell, I do like to teach. It's been 2.5 hours. Thank you, Kim. Thank you, Alan. Thank you, Anna, for being here for 2.5 hours. Oh my gosh. And thank you all for being here. That's my team I was calling out, and Anna does a wonderful job with Investor Expo. And she's like, I love Matthew, but man, he likes to teach a lot. I don't know if you know, most of the sessions you go to like this, right? They're an hour, right? Hour and a half. I have that in me, but I prefer to dig deep, I guess you would say. All right. So with that, we got a nice message from Alan. He's one of the business partners here. So I've known Alan for a very long time. That's why I partnered up with him. Been a very long time. I love it. Thank you very much. Yep, you're welcome. All right. So for those signing up, I will see you live again on Monday, 7 p.m. Eastern time. But I do recommend you go to the Market Pro training site, your membership area, go to the archives. So you can go to the archive, webinar archive, you could from the Market Pro Live, that is, and you'll see today's. That's the most recent. So it's just at noon. So you can watch today's over the weekend. You can even watch Monday nights. Monday nights will be probably a little more insightful because this past Monday night, I went through the analysis of what to expect with CPI that came out Tuesday, what to expect with Wednesday's federal fund target rate meeting, then of course the commentary after, and then we talked about Wednesday's retail sales number, okay? So, and then today I talked about the outcome of what we talked about Monday. So you can see the full story spectrum. So start with Monday, first 45 minutes we'll do it. So watch Monday nights and then watch today's 12 over the weekend. And then Monday you'll be like, okay, I get it. Because you'll see the full week basically of forecasting and analysis and see exactly how we called it. So you can then know Monday what to expect. So that way you're not just waiting for Monday. You can go through the core content in the Market Pro Live Club and be, well ahead of the others that wait for Monday night. But definitely looking forward to having you. So if you're not ready today, you have 3 days, and then this will be the last open enrollment session. So make sure you lock it in, lock in the price. If you missed out on the first 10, just message us, and I'm sure we'll help you out. Some people are faster online than others. I get it. So make sure you do it ASAP so we can get you out all the information in advance of next week. Next week is more likely the last big volume play week as we get closer to the holiday, right? So just, this is a great time. We can really get some good trades under our belt and get this covered already, right? So, we don't wait too long to get in here. But with that, I appreciate you all. Happy trading. And I will see you in our next live event. Thank you all.